Hello, my dear friends. This is your friend Vivek Bajaj, co-founder, StockEdge and Elearnmarkets. Friends, my endeavor to make you a learned person, a sensible financial market participant has been quite acclaimed by people. So I thank you so much for becoming part of my exercise face to face. I've recorded almost 150 videos and I'm trying to give you multiple dimensions in trading and investing. And off late, I've started recording few interviews with some amazing people from across the world. And this time also today, we have a champion with us. He's a learner like me, but a champion, a normal retail investor done incredibly well to be termed as champion. And now he's going to discuss with us various strategies he has been using to successfully trade US markets. And guys, today is a bonus day because I shared with him a lot of Indian stocks and he has done his technicals on Indian stocks. So his strategies and Indian market. Wow, what a combination this is going to be. So let me welcome our dear friend from US, Ryan. Hello, Ryan.
Vivek, how are you? I'm so honored you invited me on. I'm humbled to be here and looking forward to chatting.
I am so excited. I'm so excited. Every single person I've invited from US or across the globe, and what a lovely content sharing you guys are doing. I'm actually thankful to Twitter for connecting, for allowing it so easier for all of us to connect and share the knowledge because trading is such a universal language which we all speak, right?
It's right. It's Twitter using the right context can be great. It brings everybody together, and it's a great place to learn for people starting out. And this didn't exist kind of really when I was starting, and so I had to go through other methods. But it's a great way to connect with different people and meet new folks, and even like you mentioned, the market's a universal language, and whether you're trading the US market or the Indian markets or some other market in another country, all this stuff can be applied to different markets. So it's a lot of fun.
Right. So, Ryan, your profile resonates quite well with a normal retail investor. You don't have an institution background. You started with a solo individual retail investor, learned this whole art of science and the science of trading and won the championship. And US investing championship winner back to back is not an easy task. So I want to know about your story, how you thought about getting into it, how you have excelled. I'm sure you went through all the tough times as well. So tell us about the story and then we do deep dive with your concepts.
Sure. Well, I first should say I wish I won back to back, but I got finished in the top three in the back to back, so I got third back to back years. But
Wow.
maybe next time I'll come out on top. But yeah, so I went to college and in the States here in California, and I originally wanted to do computer science, and I was really into computers. And long story short, I switched into business, and so I took some finance classes and didn't really kind of get excited into stocks until a few years later. I graduated in 2005. And so 2008, I dabbled in my first stocks, didn't know what I was doing. And obviously that was a horrible time to start trading with the global financial crisis. And so I took a couple of years off and revisited it back in around the 2010 timeframe and got really lucky and had a really good first year. And I was trading options, and I thought I was a genius, and the market was just bottoming off a nasty bear. And so I got lucky, and long story short, I was paying my market tuition the next 4 to 5 years, and just learning how the market works. And I stopped trading options after that for the first couple of years. And so it was a long journey. I really looked into William O'Neill's book, How to Make Money in Stocks, which is pretty popular book. It's kind of I consider it my core reading material, but I go back and read select chapters from time to time. So I really want to get his process, his plan, how he viewed the market. Around the same time, in the early 2010s, I ran into a guy named Dan Zanger who was pretty famous for taking his 10K account up to 42 million, I think it was, back in the dot-com boom in the late 90s. And he was a pool contractor, just built pools. He didn't really have any sort of institutional background either, but he was a very technical guy, and he pulled some things from O'Neill and kind of put his own spin on it. So I learned a lot from him on the technical side, and his protege, Randy Opper, was really good with following your process, having a plan. It's one thing to identify buy and sell points, but it's another thing to be very consistent. And are you going to be disciplined and not buy things extended? Or, when we get into tough times, like we've been in the last, 6 months plus, are you going to be over trading in a tougher environment? Or are you going to be willing to wait and sit for your conditions to come back into favor? So there's a lot of back and forth in the early years, just kind of spending countless hours picking apart charts, just saying like big movers of history. Here's a big move, but what do the patterns look like before? Because you can put, the news is different throughout the years, but human psychology is always the same. There's the greed, the fear, the euphoria, and all those emotions display themselves on price charts, and things repeat. And there's the saying, it doesn't always repeat exactly, but the market rhymes. And so I'm a very technical guy. I'm not so much a fundamentalist, but I will look into fundamentals. But the technicals lead me to the water, and the fundamentals kind of help add conviction and narrow my list down. But anyhow, long story short, I kind of turned the corner after those 4 or 5 years, and started to make progress. And then the U.S. Investing Championship kind of was reinstated a couple of years ago. So I figured I wanted to see how I stacked up, and so I entered in 2020, which was a favorable market, and did really well there. Had 448% return, and then the next year I entered again, and it returned just over 200%. So it's been a long journey, and it's still never ending learning. You think you have it figured out, and that's when you get smacked across the head as a gentle reminder that, hey, you need to maintain some humility. And but I love this game. It's a great game, and anybody can do it. I think that's a great thing. There's no barrier to entry. I think that's the advantage for a retail investor. You're not an institution having to be invested all the time. We can be nimble and quick, and kind of follow the big boys and girls at the institutions. And so I love it. I couldn't imagine my life without this. And it's just a joy to kind of show up to quote unquote work every day. So.
Amazing. It's a boy next door story. Amazing. And your expressions, your glow on your skin, on your face, your smile speaks a lot about how much you enjoy this occupation. Amazing. Good to know you. Tell me, Ren, so different people come to the market at different stages. So there are some people come to the market when market is giving money, right? And it's easier for them to get in. But I call it a trap because, typically you develop that overconfidence, which probably happened with people who came during the COVID time. And then there are people who come, and unfortunately, they have to see the toughest part of the market, initial part of their career. Some decide that, oh, I want to get out of this mess. I don't want to remain here. Some say that, oh my God, how is it possible? How am I losing money? They get deeper inside it, and finally I have seen emerge as winner. So what do you think the right approach for a person in whatever market condition they come?
Yeah, I would say there's never a wrong time to get interested and involved, but me specifically, my story kind of matches your first scenario where the market was really good and you think you have everything figured out. And I think that's what people maybe ran into in the COVID market.
Yeah.
You have a lot of new retail investors, the government's giving away free money, stimulus, and people are going and taking it to the stock market, and the Fed's just pumping endless amounts of money into the system, and you get this sharp decline, and then you get a massive V-shaped rally where everything's working, and the smile on your face couldn't be any bigger. And that's usually not shortly after when the smile can't be any bigger on your face is when the tough times come. So I think me personally, looking back, it was like a horrible thing for me to have success right off the bat. If I was going into it again, I would probably want a tougher market, just because it would test your resolve. You're like, okay, how much, I know I like this, or I think I like this, but how much do I really like it? If it's going to be this tough and difficult, am I going to have what it takes kind of to man up, if you will, and stick through the tough times? And it teaches a lot about yourself too. Failure, I think, how are you going to bounce back? Are you just going to give up, or are you going to kind of fight and learn from your mistakes? And so I think, people that are starting maybe now in this market, they're seeing how very difficult it is. It's one of the worst starts to a year in since the 20s, I think, or the 1930s. It's a pretty tough market. If you're trying to go long, at least if you've been shorting, if you're into shorting and you've been shorting since November, December timeframe, you've been doing pretty well. But Even then shorting's hard because then the most vicious rallies are occurring in bear markets. And so you have to kind of be quick and nimble. But I think, people that maybe start now and they say, hey, this is tough, but I think I can make it through. And then they do make it through the other side. That's a huge accomplishment in my view, to say, hey, if I can survive this market, one of the worst in history, I can survive any market. And you need to have a plan in place and a process in place. You can't just go into a market expecting, randomness and, random rewards. You have to have rules and buy rules and sell rules and have discipline. But, assuming that's all there and you survive a market like this, just starting out, then I think it's a good sign of things to come.
Sure, sure. And how important it is for a person to know how to short the market? Because typically retail, we have learned the art of buying because everyone around us is asking us to buy. But as a trader, how much importance is played to learn the art of shorting as well?
Yeah, I think it's a personality thing. So me personally, I'll short from time to time. I don't do it a ton. This is like a perfect example of a market where your shorts are just paying huge dividends. And normally if you pull up a monthly chart of like any sort of market in any country, over the long haul, the chart's going up.
Yeah.
So there's ebbs and flows, there's dips and spills and chills along the way. And you get some bear markets that last maybe a year or 2 years. Those can be good for shorting, but I usually just kind of like staying in cash when the market gets tough. Cause each time you go out and you put money out into the market, there's risk that you're throwing out there. So even though you think, you have a good setup, long wise, and you make some money on the long side and the market starts getting kind of weak, and then you're constantly putting money out there at risk and trying to play all the swings. And so in a trending market, we've been trending down, the last 6, 7, some stocks the last, year and a half. The indexes in the US have kind of masked some of the weakness that we've been seeing since kind of the blow off last February. But, shorting for me is a little tougher. I just kind of like to play on the long side when the market's giving, and that's not all the time. It's only a few times a year maybe, but stocks can go up 100, 200, 300, 400, 500%, et cetera, et cetera. Whereas on the short side, unless you're trading options, the most the stock can go down is 100%. So there is a place and time to use it. And I think it's important for people to have some sort of short setup in their arsenal, but I think it's one of those things too, where you just want to really focus on one or two things and really get really good at that. And so if you're buying, a couple long setups, maybe just stick to that. And if the market's not providing you those long setups, then maybe if you're not as good at shorting, don't try and force something you're not great at, and just maybe sit and work on your patience discipline versus some other strategy. But it is important to have, once you get comfortable with the long side and you start to, get some time in the markets, multiple years, and you see how things work. And sometimes a short setup will come and you'll look at a chart for 1 minute. You're like, I don't need to see anything else. That's a perfect short setup, and you take it. And, but for me, it's just, I like to kind of trade on the long side with short sprinkled in here or there. It's just a lot tougher shorting. Yeah.
That's pretty much like me. Even I loved long side, especially in India. I hit to short Indian market. I don't know why. Maybe because principally I'm bullish India. So that's why maybe I always want to buy first. Great. Fantastic. So talking about India, you have a lot of Indian charts in front of you. So let's get it going.
Sure. Yeah. Let me share my screen here. All right.
Yeah.
So this is this chart of the Nifty. Let me pull out, this is the weekly. Can you see it okay? I know it's kind of.
Yeah, I can see it. Yeah. Do you look at the weekly charts? Can I discuss your setup also together with the charts? Yeah.
Yeah. So I usually like to look at, I played around with my bar colors. So I used to use candlesticks when I first started. And then, my mentors were using bars. And I just got comfortable using bars to kind of view. So you just basically have the close. There's open, high, low, close bars, but I usually just kind of look at the close. Because there's that old saying that only thing that matters is the close. You can have a bunch of intraday back and forth, but where's the bar closing?
Yeah.
But basically, I eventually eliminated, the green, bull bars and the red bear bars from my thinking. Cause over time, I just learned that for me as like a technician, the thing that's most important is price structure. And I would let in the past some of these like emotional bars, like if you get a big red bar, you would see it as like, oh, that's bad. And you'd see a big green bar, like, oh, that looks great. And I just wanted to eliminate all of the emotions from my thinking and just try and be robotic about it. I don't want to get too high when the good times are here. I don't want to get too low when the bad times are here. I just kind of want to stay even keel and remain unbiased. And so that's kind of a little bit of the background on the same color. I figured the same color, it helps me just kind of see the patterns a little better. Like, so for example, like here you got, a huge move off the COVID lows, and basically you got this nice bull flag. So this is kind of like stuff I would look for when you have a continuation type move, you get consolidation, you get this nice little bull flag that's slightly descending, and it kind of breaks out and retests the flagpole high, kind of flags again. So it's like a flag on top of a flag, and then it kind of keeps going. So I like to look for these like simple type of patterns, but I like looking at the weekly to start my homework on the weekend, because it just basically gives me an idea, like, are we trending or are we not? And so when you're in this kind of environment here where the market's trending, then, when you go back and look at your watch list, or you have a basket of stocks you're looking at, then, hey, I should be looking on the long side. Whereas now, if you draw like a trend line here, the trend broke. I can draw one for you guys. So let's just say like this is like a general trend we had during COVID. We broke the trend, and now we're starting to put in, some lower highs and lower lows. So this is kind of been phasing into a downtrend. And so if I'm looking at the weekly and I'm thinking, okay, now the good times are kind of behind us and we're downtrending, maybe I don't want to be looking for too many longs. You can find some counter trend trades, but I look at the weekly just to say, hey, what's the big picture? If we're downtrending, maybe I should be looking at shorts. I mean, it might be a little tougher down here. A lot of meat's maybe off the bone in the short term, but this is kind of telling me, hey, if I'm going to take anything long, it should be like a very tactical, quick trade. I'm not going to be swinging for the fences, trying to hold something for 2 to 3 years. Maybe maybe it's just like a 2 or 3 day swing. So having like a self-awareness of knowing by looking at the weekly charts, are we trending or not? That kind of gives me like an idea of like, hey, maybe I should just be, if I'm trying to trade anything, it's going to be short and sweet trades and not overstay my welcome. Because if you've been trying to buy strength in this market, you've just been getting ripped to shreds. So it's just a good gauge for me to say, hey, are we trending? And if we are, then I'll be looking for longs. And if we're trending in downward, then maybe something bounces to a declining moving average, or bounces into some sort of downtrend line after a 20-30% bounce, then maybe you can start looking to short again. But I start with the weekly chart, and then I usually go into the daily chart to kind of, the daily is usually what my buy decisions are based on. Okay. So weekly is more of just like a general market sentiment, and then daily, and sometimes I'll go into an hourly chart if I really want to maybe kind of get ahead before the daily triggers, some anticipation type setups, but I don't do that a ton. It's just more of like, hey, the daily is kind of your intermediate time frame, and I'll usually, I'm more of a swing trader. I don't really position size and hold for multiple quarters on end. If you have a really good fundamental story, I think that's where it can be helpful. You've done the work, you've got boots on the ground, doing the due diligence on, hey, I've got a lot of conviction in this company. They're kind of changing the way that a certain space is played, or they have really good earnings growth, revenue growth. If you have added conviction and you're more comfortable holding through the ups and downs of a stock's move, then that might be for you. For me, I like taking advantage of multiple swings, maybe anywhere from like a few days to a few weeks. And maybe I'll ride that same, if a stock goes like an Apple or a Google or an Amazon that just trends for years, it's really hard for me to kind of sit through all the ebbs and flows. So I usually just like to trade in and out of them. I might not catch the entire move and hold it, but I'll try and get bits and pieces here and there. And so that's just kind of my comfort zone, and everybody's a little different. People like to day trade, and it's just not for me. But, so for something like this, if I'm looking at this chart, probably the best thing that, there's the saying, time heals all wounds, and I don't know what's going to happen next, but usually when you get these breaks, in COVID, you can kind of tell it was a pretty quick and sharp break. Yeah. So when you get like some, sharp panic, it's a little easier, especially when the Fed's got your back and dumping tons of money into the system. It's a little easier to maybe recover. Whereas here, it just kind of seems like to me that we're correcting, like it's not a quick correction. It's just more of like through time and price together. So the best thing I think for me, assuming this doesn't turn into like an '08 thing where we just kind of keep tanking all the way back down, like you maybe just want to see, the market mark some time for months. Basically for me, the longs would, in my opinion, the best scenario would be we just kind of vacillate back and forth the rest of the year into next year and build like a new base. So we have like a nice big move. Usually we get these big moves. You don't want to be pressing the gas after you've had a huge move. This was like going for like a year plus. And you don't want to be greedy and you have to kind of tell yourself, hey, we just had a massive move. Maybe I should be pumping the brakes a little bit and not, buy things every day. And stuff takes time to repair. And so I think, from here, we want to see some sort of price digestion sideways that can create a nice, new base for maybe later this year or next year. There will be, if you're an active trader and you have different strategies for kind of doing shorter term swings, there'll be some things to do here and there. But from a bigger picture perspective, I think we just need a lot more time, just given that we've come a long way. And now instead of, printing money, the Fed's, raising rates and inflation's high. And I think I'm not an economist by any means, but, they may be trying to solve for inflation and not so much solve for keeping the market afloat. And then, that people had a couple of good years to take advantage of that already. So, it's not an optimal environment, but my motto is I like to play dumber than a box of rocks. When I let my opinions get in the way, that's usually when I lose money, because I think something should be happening. There's all this economic backdrop, and the exact opposite will happen in the market because the market's forward looking. Maybe a lot of the bad news is starting to get priced in. I'm not saying that's happening here, but that's usually what you want to see when the market's been getting crushed. You basically want all the bad news to get out there, and that's when you can start monitoring. Hey, these institutions are kind of shrugging that off. They're looking ahead. And they're starting to buy stocks when all the bad news is coming out. And that's usually when bottoms can form. And I'm not sure if we're there yet. I have no clue. I don't like to make predictions. I just take it one day at a time. And each day you get, a puzzle piece, or in this case, a week, because it's a weekly chart. And you get the puzzle pieces that kind of, stack up and they give you clues each week or each day. And I usually use that to make my decisions. I could be bullish one day, buy a few things. And then for whatever reason, you get a nasty reversal or, something changes. And so I'm not going to be stubborn and dig into my original thought. If I'm wrong, then I'm out and my view completely changes from day to day. So I think it's good to be more reactionary but that's easy for me to say as a retail investor. I think if you're managing a lot of money for like an institution, it's a much different ball game. You can't just be swing trading in and out of these little patterns, and they have to have more of a foresight, if you will, maybe a little more predicting, and they're very dug into the fundamentals as well. Like they're buying based on fundamentals, not so much technicals. I don't even think a lot of these guys probably look at charts. So it's a different ball game. But for retail traders, I think it's good to just basically start with the weekly, say, hey, are we trending or not? And then start, your strategy should be adapting to the current environment that we're in.
So Rand, what happens in retail, if you talk about core retail, then they're neither doing fundamental nor they're doing technical. They're just listening to other people and doing what they're asking them to do. So say, for example, let's take a case study that someone talked about a stock called TCS. Okay. And my friend told me to buy TCS. Now, can you tell me how do I validate his suggestion through a chart and then take an action that is it worth looking at TCS or not? Now that you have the TCS in front of you, that's why I took the fancy to ask this question.
Yeah, so it's a good question. That's where I would get into trouble in the start. So you would have, when you're learning, if you're new to the market and you're learning, you really want things handed to you. Maybe you necessarily don't want to put in the work, and you think it's, especially if you have success right off the bat, you just think it's easy. And I would ask, my mentors like a lot, like, hey, what do you think of stock XYZ? And they'll say, oh, it looks good. And you're like, okay, what does that mean? Does that mean, does look good mean buy? Does look good mean, it's keep on watch? And so like, people will buy it because, somebody say, oh, it looks good. And for all you know, the person that said it looks good, they bought it like 20 or 30 or 40% lower. And to them, they're like, yeah, it looks good. It just keeps making me money. Whereas, it might not be a great part to buy, spot to buy on the chart. And so I think it's important too. I think what people are finding out, or if they didn't before, they found out the last 5 months or 6 months, is just because you, like, if you're a fundamental person, just because there's good fundamentals in a company, you need to have the price patterns and the technicals match up to it. It doesn't, just because you have soaring earnings, it doesn't mean it's a great buy stock wise. You could get lucky and just buy it randomly and it'll have it work. But if the institutions don't agree with your analysis and they're not buying it, and that's all that really matters. Like, I want to know what they're buying. Like, if they're piling into something, I want to follow them. If they're not, then I don't really want it. So it's just like a simple, methodology. You can kind of see that through volume. You can, if someone's piling into a stock, you can see like massive volume changes, and there's little clues to pick up on there. But like something like this, for example, for TCS, they say, hey, it looks good. Well, it was looking okay, kind of basing out. This is really what you want to see in a stock. If you're kind of stocking to buy, you get like this nice vacillation back and forth. And so to me, that's a sign that, hey, we had a prior move, but then we're kind of like just marking time and absorbing the buying and the selling. And this is usually what I usually look for. So like here you had back in January, attempt to break out, it failed. And so it kind of moved all the way back to the other side of the pattern, where prior buyers stepped up. So this is a potential support level. So it got all the way back down to support, buyer stepped in again. So you're just creating this nice channel. But you notice, back in August or the late summer, fall of 21, we get up to this, call it like 4K level. And the next time it went up, it tried to break out. It didn't break out, but it still got back to it. Then you can start to see the latest bounce attempts didn't all make it all the way back up to the top. So buyers are getting a little more weak here. So then you get slammed all the way back down to this prior support. They defended, but when they came up again, they got kind of smacked right into the same kind of level. So they're not really mustering up the same power that they did in prior months. And so that's kind of a sign to me like, hey, maybe the buying pressure is waning a bit. Now we're printing lower highs, which is not bullish. And so, we finally broke below this huge pattern. We kind of buyers tried to step in and reclaim, but they didn't have much power. And so they just rolled over again. So right now, to me, if somebody said, what do you think of TCS? I would say it's an avoid until at a minimum, we can get back over this, prior support area, which may not be resistance. And so it might bounce up again here. And if you extend this line out and, maybe reject, maybe it reclaims, and that could be, a good sign that, hey, it's the market or the stock is recovering. But for now it's below support, and I don't want anything to do with it. I just maybe want to see some more time play out.
Okay. But what happened a couple of days ago when it did get into that range once again, and it went down again. So in this scenario, one would have bought it when it was getting inside the range with a stop loss, right? And the stop loss would have hit, which is fine.
Yeah. If you want to take a shot at something like this, I have no problem with it. Just make sure you always have a stop in place. I think it's important. People maybe starting out too, they don't really have a stop loss plan, and they trade on hope. It'll maybe be down 10%. Oh, it'll come back. And then 10% turns into 15, and then 15% turns into 30%. And then they're thinking to themselves, I'm so far down now that, I can't sell. I can't possibly sell now. So they hold on, and then that 30% loss turns into 50. So it's very important for not only your account, but also your mental capital to always have stops in place. Like, I like to keep my stops pretty tight, maybe tighter than most. But you don't really want to see a small loss turn into a large loss. So you can't always dictate what happens in the market, but you can kind of dictate, where you put your stop, when to buy, when to sell. And so holding on to a loser is something I learned early on in the beginning is not ideal. And so if they're either doing what they should should be doing, or they're not. If they're not, I don't want to stick around and find out. I'm just gone. And if for some reason, let's say, for example, somebody bought like right here,
Yeah.
and then it failed, and then it worked again and worked back up. You have to, some of these things you have to take multiple stabs at. It's not always going to be, you're not always going to be right on the first one. Maybe you try twice and then it doesn't work. And so you give up. And then on the third time it goes, but you ignore it because you're so flustered and annoyed that you lost on the first two. And then that's the third time is when it works. And so the market can be pretty tricky, but yeah, I think something like this, that just needs a lot more time. And a lot of stocks are kind of looking like this. Maybe you had like a big move, like the stage 2 advance, then you kind of go sideways. Maybe this is a base, but now this could be like distribution. And then now they're starting stage 4 declines. And so you really want to avoid trying to buy in stage 4. You can maybe play like a counter trend type buy, but when we're in stage 4, it's usually best to sit in cash or maybe short bounces type of thing. So
sure. So Ryan, your weekly analysis of Nifty, which suggested that it's still in the downtrend, and your TCS analysis. So how do you link both? Like, so you will always look out for stocks to short when you know that weekly trend of Nifty is down?
Yeah. So like something like this, like we've already come so far down in the short term from, prior highs. Like I'm not interested. I wouldn't want to be interested in shorting down here because we're kind of close to, possible support. If you took this like flagpole high here, which turned into like this kind of like mini flag here, you can kind of tell this could be an area of interest, and a price is trying to react so far. I mean, this level here, like this 15.6 was prior support. So maybe it's trying right now to reclaim that. Maybe it rejects and we go even lower, but if it reclaims, then, I don't really want to be shorting because I'm like, okay, maybe the meat's off the bone. And when you're shorting, I like shorting into strength and not so much weakness.
Okay.
So when I'm looking at this, I'm like, okay, well, yes, we're in a downtrend, but maybe I don't want to be starting shorts just because we already came a long way from a couple of weeks ago. So I would like, for me to want to short again, maybe I would want like at least like a bounce back to this like 16.7 level. Yeah. And then if it maybe rejected or maybe it poked above and, get people excited. And then we start sellers come in again, and then we start to maybe roll back over. That's kind of where I want to short, or maybe we mark more time. And then we run not only this level, but this downtrend line up here. So you maybe get like a nice counter trend bounce. This is kind of like where I would want to short, not down here.
Okay.
And then like down here, like if you want to take like a counter trend long, this is probably where I would be looking for a possible bounce back up. I mean, there's no shortage of sellers over here, so it might be trickier. And again, you ideally want to be buying longs in like an uptrend and continuation patterns like this. So when you try and do it in downtrends, just know that don't overstay your welcome. It's you have to be quick, and if it works, great. But if not, don't sit there and hold because it could roll over faster than you think.
Interesting. So can I safely assume that you are not a breakout trader? You love to play retracements.
I started out, I still take breakouts.
Okay.
When I will say that, and it doesn't come often, but when you get those 1 or 2 times a year where everything's coming together, you have the indexes have been basing out and look amazing. And there's multiple different groups, sectors, stocks that are all setting up. That is the most powerful time of the market. You get that herd mentality. And because honestly, breakouts are the exception, and breakdowns for that matter are the exception and not the rule. Most of the time, the market's just kind of going back and forth, basing or in a range bound. But when you get breakouts and you get that herd mentality, that's an incredibly powerful time in the market, and it just blows anything else away. So, that's when the great trends start. And so that's ideally the best time to get involved. 2020 was a good example of that. But, over time, you kind of find out that, hey, breakouts don't always work in certain environments. And so you either just sit out until they start working again, because you don't want like only 3 stocks that look good and everybody has their eyes on them, and then the other 5,000 stocks in the market just look terrible, because it's just not ideal. You want as much stock participation as possible. You want the wind at your back, if you will, to help with your long selections. But in this type of market, if you're buying strength, you probably haven't been getting very far, because it's just, you have to buy, you shouldn't even, it's been tough to buy. Let's just, unless you're in the commodity trade, the first 4 to 5 months of the year. And we're in downtrends. If you're trying to buy, just know that it's counter trend, and it's probably not going to get far. So you have to be very quick.
Sure, sure. So you are making me excited by showing me all the stock names of Indian market. So let us go one stock and buy, and let me get your views on each and every stock.
Sure. Is there any? I have them in random order. Is there any in
No,
particular you
let
want
us
to look
just keep on doing that.
at? Okay, sure. All right. So this one, let me go to the daily. So this is kind of what I mean by, like, you have a nice trend. So this is maybe like a choppier mover compared to others, but you have this nice trend. You get higher highs and higher lows all throughout, the second half of 2021. And then it was kind of right around the January timeframe, we broke trend, came back up to retest, couldn't reclaim it. We got, smacked down with the broader market. And so, like, since then we've been putting in lower highs, lower high, lower high, lower high, and lower lows, lower lows, lower lows. So something like this, I would not want to be maybe trying to get long. I mean, you could, thinking, hey, maybe this is the start of a new base, like here's prior highs. Maybe this is kind of like the first part of a new base, but like from here, what you want to see is when you get stuff that gets creamed like this, you really want to just mark time sideways. Otherwise, you're just at risk of these just continuing down. This is a pretty strong downtrend. So one thing I'll, share is, most people know this, but a trend is an incredibly powerful thing. And when people kind of hear that quote, like, they think of like the uptrends, but the same goes for the downside too. So, people are trying to make predictions. Oh, the worst is over. And you never know. The same goes for the downside. If you get caught in a strong downtrend, then you maybe don't want to necessarily step in front of a steamroller. It might run you over. But for me, like something like this, it's not an uptrend at all. If you're thinking of going long, you might want to just wait a couple more months for it to kind of settle down and see if the sellers are abating a bit, and you want some sort of price action to tighten up. And for this right here is an avoid for me at the moment. Next one, this one isn't as bad. So we're still kind of in a nice range here. So, buyers are kind of stepping in at this, 640 level of support. We're testing it again. And, people that aren't familiar with maybe basic technical patterns, like downtrend or descending channels or descending wedges, while they're in a downtrend, they are potential bullish setups. So you get these descending patterns that if they break, it's going to usually be a move to the upside. It doesn't mean that they're going to go all the way back to highs, but generally you can kind of see here too. You get on the flip side, if you get these, rising channels, it's good as long as they're in them. But once they break, they usually break lower. Like it tried to break higher here, you can tell, and didn't get far. O'Neill talks about in his book, when you get a big sustained trend and then you get these overshoots over a channel top, that's usually a good spot to sell or reduce into. So normally you get these rising channels, usually break down, and descending channels usually, I say usually because it doesn't always work. There's always exceptions, right? And you just never know. You always have to have your stops in place in case it doesn't work, right? But this is still defending support here. So maybe, another week or two, if it can kind of tighten up and go sideways, maybe it wants to try and break out of this little channel and just kind of keep playing this range. You can tell it's just range bound back and forth. And so this is still basing out, but it looks like the buyers are trying to defend still, but we'll see. That needs a little bit more time.
Yep.
And then this one, this doesn't look very good to me. So you had a nice big move, but you had, the first peak here, and then you get the second peak. So, call this like a double top. And then it got slammed all the way back down. It tried to bounce, but you can kind of tell that this bounce was somewhat weak and didn't get very far back into the range. And so, it rolled over, lost this big support here. And since then, it's just been trending down. It's staving a comeback for now, but this is something that could potentially, like, it basically needs to, for me, kind of get back above this, 1,070 level. Otherwise, it could just kind of vacillate back and forth for weeks or months. And it's just a complete avoid until it can kind of reclaim this level for me.
I mean, the structure of the market is such that it is so difficult to find out stocks which are potentially a buying candidate right now, except the one which you just saw before this, Bharti, right?
Yeah, this is something like I would like right now, if you're looking at the indexes, they're, like I said, they're lower highs, lower lows. So there are a few stocks like US stocks where they've already kind of declined and they've been going sideways on their lower end of the range for the last 3, 4, 5 months. So while the market's going down, these things are actually putting in, higher, like for example, let me find one like this dual here. So this thing got smashed all the way down, the December timeframe. And since then, you still have like lower highs or lower lows, lower lows, lower lows, lower highs. But then since then, it's been getting in some nice sideways work since March. And then while the broader market was still putting in lower lows, this put in its first higher low here. And then it put in another higher low here. So this thing's making higher lows while the market's still tanking. So this is like a sign of relative strength to me. And it's also today, it looks like it's trying to break this downtrend line. So this thing's trying to break out while the market or the general indices are kind of stuck in running in place in the sand. And so this is like a sign of relative strength to me. Okay. So like if you go back,
let me go back to the chart. I have a question with respect to your chart. Yeah.
Yep.
Go deep. Can you please zoom in into the current bar chart, the latest one? Can you zoom in? Tell me, when will you enter and what will be your stop loss and the risk management take profit?
Yeah. So this is technically like for me, this right here would be like a technical buy, like through this trend line.
Okay.
That's usually like the kind of stuff I look for. However, I usually would like some sort of consolidation under the line. Because when you get a big rip into it, it's already come from, let's say this higher low here at 80, you'll call it. It went from 80 to 100. So it already ran 20% into the breakout. And so it already used a lot of energy getting there. So for me, this is kind of like a tougher buy. If you were to start it today, I would probably want to see it reject here because here's a prior high. I would maybe want to see it not break out today and maybe just kind of pull back and go sideways tight for a few more days, because that also gives you a better, those tight price zones give you a smaller stop. So you can kind of tell, hey, I don't need like a $7 stop because this thing's wide and loose. Like it's nice and tight. I can only maybe put like a $2 stop on it. And if it loses like a little consolidation, like if it flags out here for a couple of days and then it loses its support, then I'm like, fine, it was a tight area. Versus like here, I mean, it went from like low 90s and you're trying to buy at 100 or 102. That's like a maybe $7 stop and it's kind of wide, and chasing in this market has not paid. So, in the back of my head, I'm kind of like, I'm not touching this, even though it looks good, like overall, like tactically, if you're trying to get into this might not be, for me anyway, it might not be the best spot to try. I mean, you can maybe try a couple, usually the century marks, like 100, 200, 300. If you bust through those for the first time, they could work pretty well. But for me, I would need to see some sort of tightness from here, maybe a reject tomorrow, get people off the trail. And then if it wants to maybe resume the next day, that might be in a better chance. But here it's just kind of too short-term extended for me the chart looks good, but like tactically in terms of entering, it's maybe tougher.
Interesting. I want to show you one stock with similar structure as this stock. Just type Indus Towers, INDUS. Indus Towers. Yeah. The one down there, Towers. Yeah.
Yep.
It looks similar.
So this is something similar. So still stuck in a pretty big downtrend. So you can kind of see, like, for example, maybe draw it here. It's actually trying to poke above this initial downtrend line. Like, to me, this was kind of like the slam bar zone right here. I don't know if this was some sort of news hit that day where it just got a completely gap support and just got crushed. But since then, it looks like it's trying to defend this, we'll call it 200 level. So you get defense here, a little bit of a shake, a bigger shake, and then it reclaims, but then it's kind of putting in a higher low. So buyers are stepping in at this higher low part here. So, and then the next pullback you get is slightly higher low here as well. So to me, this is trying to repair a bit. It's still below the pretty big 240-ish level, we'll call it, but it's starting to poke above this downtrend line. And maybe, if you draw an even another consolidation here, you get this downtrend line, broke above, and then you can kind of draw some of this. These sellers kind of came in at this, what is that? Like 208, got rejected. They kind of stopped here again. So if we can kind of clear this 208, maybe it can kind of bounce all the way back up to this, mid 220s or maybe even 240 area, which I would guess may, I don't know, maybe buyers just keep control and it just works all the way back up. But to me, it stopped going down at least, which is good. And it's breaking this initial downtrend line. It's broken this recent downtrend line. It's trying to clear this little mini pivot here. So it's definitely trying, it could be for a quick trade if people are looking for active trades. You might not want to swing this one for like a multi-year hold, but to go from, low 200s to maybe 220, 240 and get 10, 15% on a bounce type of play. But yeah, so it's trying to put in higher lows, which is a good sign.
Awesome. So just like musicians use chords to communicate, we traders use charts to communicate with each other.
Yes. And I mean, for me, like if I try to trade something without a chart, looking at a chart first, it's like the equivalent of like a pilot flying blind without a wingman. I mean, again, I'm more biased towards the technical side of things. I know some people scoff at the technical side and they only want to, to look at the fundamentals of the company. And that's the great thing about the market is what I do. Somebody may look at it and just be like, what is this guy talking about? Like he has no idea what he's doing. And then I may be saying the same thing about somebody that uses another strategy. So there's no right or wrong strategy, which is, I think, the beauty of the market. The only thing that is universal is, are you making money on that strategy or not? At the end of the day, did you make money in the long run? And again, it's not about like one or two trades. It's like about a series of trades, or if you're an investor, a series of investments over time. And that's the key to longevity, is really maintaining discipline. Yeah, anybody can get lucky and have a couple good winners in a row here or there or whatever. But it's really staying on track, not getting off your plan. If you have rules, following your rules, and doing it consistently over and over and over and over and over again. You'll have losers along the way, but it's, maybe like you have 4 winners and a loser, and then you'll have 4 losers and then 1 winner. But that 1 winner maybe pays for those 4 losers because you cut your losses short on the 4 losers. And that 1 winner was a huge winner that pays for a lot of little losers and then some. So I think it helps me to kind of think in terms of the long term and not get, too down in the dumps about, oh, the market's bad right now. It's not maybe suitable for my strategy. I know this is not an optimal time for what I like to do. So you kind of have to sit and wait. And, but I think it's important for people to maybe maintain a longer term view and helps maybe with their confidence and psyche, and you don't need to be buying things every day. But I mean, this is something that you could possibly try, but there's another good analogy that people say, hey, if you only had like a couple bullets a month to like fire on a trade, like, would you take this trade, or should you wait and let things develop more in your favor? So that's another good kind of little anecdote that people use to try and, if you have a problem with discipline and you always want to fire and buy things every single day, just because the market's open doesn't mean you have to buy stuff. But that's the hardest part, I think. At least for me, that's my biggest weakness is, over the years, I've seen so many things, and you think you've got certain like patterns figured out, or you think you have an idea what the market participants may be doing, and then you're firing away, even if it's not big size, like on things here or there, but maybe you get chopped up for a series of a few trades. And then like afterwards, you're kind of like, why did I do that? That was not ideal. The market's not going anywhere anytime soon. Like, that was dumb. Don't do that again. And kind of a thing. But so I'll do that here and there, and you'll have, your purchases, or if you're trying to short, the market gives you feedback, right? So if you lost 5 in a row, maybe dial it back. Maybe your strategy is flawed for the current market, or maybe you're not trading your strategy the way it should be traded. And it's you're a you problem and not a market problem. So, I think it's important for people to kind of get feedback from the market. Like if you got like 4 or 5 winners in a row that are working great, you can add more size and buy more things. But if it's the exact opposite, you don't want to keep firing away and digging yourself a bigger hole. Having, rules in place to kind of catch yourself when maybe the market's not in a giving mood, I think is important. Having that self-awareness and market awareness is key.
Yeah, true. So I'm going to take 5 stocks at least now to discuss.
Okay.
So let's talk about Tata Steel. So the one which you see is the second one, just below TCL. Tata
Yep.
Steel is one of the largest steel manufacturer in the world. It's actually a multinational from India. So tell me, what do we do here?
So if we start kind of like on the progression, if it helps with the progression. So back in May 2020, we had this nice advance, and then we kind of put in this like bullish channel here, I would call it. Not so much a flag, but more like a bullish channel. Again, you want these bullish ups, you want them to be descending. It broke out, made a nice move into the summer of last year. And then this kind of looks like a head and shoulders pattern for people that aren't really familiar with that. You kind of have like a little left shoulder, a head, and a right shoulder. And those are normally, bearish patterns where you get the initial rip up and then you get buyers stepping in, taking out the prior high, but then sellers come in and take control. And then buyers try again at a later time, but they can't really muster up any strength. And so you can kind of tell too, like my eye would look at this and say, like we talked about, like those rising channels and wedges. This right shoulder is kind of like a rising wedge, which isn't a bearish setup or bullish setup. It's more of a bearish one. So it ended up failing. Again, you kind of have these, these bearish little channels you can kind of draw, and it overshoots it a bit, runs into this downtrend line here. So it faked up above it. When you get these false moves, they usually lead to nice plunges in the other direction. So this thing's been basically defending this 1060 for the last, since November, December timeframe. And it kind of bear flagged into it about a month ago in May, and it's lost it since then. And so right now, this is a massive support level in my view, and it's below it right now. And this is a complete avoid for me anyway. I mean, maybe if people are brave, they want to play for a bounce back up to this round 1000 level, but this is just something, there's no setup here for me. There's no, consolidation. It's just fluid down. And so I think it's for me an avoid until we get more clues in the next month or two.
Awesome. You make it so simple. I mean,
I wish it was that easy. Yeah. It's actually knowing what to do and actually doing it are two completely different things.
Yeah. Let's talk about the next stock, Reliance, which is one of the largest companies in India, and I would say the next big thing in India right now.
Sure. So this isn't as bad as some of the others. So basically, we had a nice actual cup and handle. It did break out in April. So for people that aren't familiar, here's another little flag here for visual. It was nice. So you get this initial move up the left side. So that's like the left side of the cup. And then you just basically base around here for a nice, what was that? From November through April. So that's some nice multi-month digestion. And so you kind of have like, if you can envision a cup and then a handle here for people that aren't familiar. So these are usually bullish setups. And so it broke out of the handle, went into highs, but didn't really quite stay there for too long. And so it got smashed all the way back down, came right back up, tried again, didn't get very far. So right now, the market's saying, hey, we don't want this to go above this 2750. Sellers are still in control. They're not in control down here per se. And again, that's really what you want to be like monitoring is like, hey, buyers prove at resistance and they haven't really proven anything here. And then sellers, they prove at support. And while they maybe bent support a little bit for a few days, they didn't really prove any follow through. So nobody's really proven anything yet. It's just kind of like choppy range bound action since then. So, for something like this, I think if you want to buy, it's probably just good to wait for this level to get taken out, which could take weeks or months, if at all. And then if you're looking to maybe short, you really want to see this level down here at 2,300 get taken out. Otherwise, I think we're just in a range here. And this is holding up better than most so far, but there's really no setup for me. It's just kind of in no man's land, and you want to avoid stuff in no man's land too on the chart, because it's just random. You want to avoid random rewards, and you want something like this to show up, a nice continuation pattern or something like this, and buy out of this, versus trying to like play choppy range movement. And it's not conducive to winning trading. So you really want to act like a casino and stack the odds in your favor, and really wait for stuff like this to come around or this to come around. You can trade it, and then if you can monitor the reaction. You have a little bit of cushion if you were to buy it out of the handle here. And that way you're like, okay, even if it fails, I can just sell it and still have a cushion to see how it does, because I got in a little lower in the handle area, versus trying to, buy a little extended up here, because breakouts haven't really been working in this environment. And again, that's where the self-awareness comes in. It's like, am I going to bet on the one strong salmon swimming upstream versus like 5,000 stocks that are getting crushed? And so while it's relative strength, I think you got to also keep in mind where you're trying to buy it. So it's okay, but maybe some more time.
Sure. Let's talk about HDFC Bank, which is one of the top banks in India. Unfortunately, has been an underperformer for last few months.
Yeah, so this one again is somewhat similar. You've got this, to me, you got this nice range that's been carving out here. It tried to break out here, it failed. Tried to break out again, it failed. Similar thing as the last one we just looked at. Sellers tried to take control, but they haven't really gotten very far below 1,300. So it's trying to, the bounces here were kind of weak, but it's still trying to reclaim this big support area. But for me, this is, not something I would be interested in. If you're a range bound trader, maybe you can try like on some sort of continuation back into the pattern. But,
okay.
This stock is somewhat choppier to me. And what I mean, like choppy, there's like a lot of bar overlap versus, a stock that may be more linear. You kind of want to see nice linear moves. Stocks that know how to go 1, 2, 3, 4, 5, 6 days in a row versus like something like this where it may go up one day and then chop around for 2 more days. And then it goes up for 2 days and then chops around back down for 3 more days. It's a little harder to maybe catch something like this. So each stock has its own personality, its own way of moving. And so I think that's one thing that kind of helps me too, is before I buy a stock, I'll maybe like buy a couple shares or something just to get an idea of how it moves. Does it usually sell off after 2 strong bars in a row and then just rest for a few days? Or does it like to get up and go for multiple days in a row? So I think that's important too, knowing, how your stocks move, and they each have their own different way of moving.
All right. Hey, Rand, I want you to share one of the stocks where you have current position or you must have traded recently in your market, just to understand the structure there.
Yeah, the only long I have right now is this CRDO. So this is a recent IPO. So basically what happens with the IPOs, I think you'll find, is unless it's a Google or I'm trying to think of another one, but the exceptions that maybe don't undercut, a lot of these will have an initial advance when they first come out, and there's no real supply because maybe the lockup expiration date is, months out. So there's really not a ton of supply once you first hit the market. And so you get, usually on IPOs, you get an initial run up and then the selling will start to hit. And most IPOs will undercut the initial IPO low. And so this was no different. So back in early May, this finally gave way, lost the IPO low, but based out for a little bit, for a couple of weeks after. And then this was a game changer on earnings. It basically screwed all these sellers down here. All these sellers are now trapped. The earnings came out, market reacted favorably. So it totally gapped this downtrend line and reclaimed its IPO low. So that was a big positive for me. And it's on big volume down here as well. What's that, like the 4th highest volume day in its short history. So, but like kind of talking about choppier stocks that we were just saying, this to me is the choppier stock. Again, like if you look, the bar action's wide, there's a lot of intraday moves back and forth. And so this one, you kind of have to have a little bit of patience with, or maybe size down to allow for it to, move back and forth since the ranges are so big. But, it tried to break out above its earnings day high at like that 1350, got slammed down, came back into here, ran back up, got slammed back down. And then so you kind of have these points here. You got this maybe mini uptrend line. It came back down into, found support, and then started lifting. So I think I bought a few, pardon me, in this 12 zone, like high 11s. It's not a huge position, but it was just, to me, this was a character change on the earnings gap, and it may need a little more time, but today it's kind of breaking this downtrend line. But this compared to some other stocks in the US market, like if you look at SHOT, like this is a new issue as well. So I like looking at the new shiny toys in the market. These new IPOs that maybe aren't as well known. I'm not to say this one's going to do anything. It can completely fail from here and not.
I'll take your opinion on two new IPOs of India. People are very excited to know about it. But first, you show me this.
Yeah, but like versus something like Shop, they just got absolutely crushed. And so instead of trying to like buy some old leader off the low, like I'd much rather look at maybe a newer name that's maybe not as well known, but showing, decent pattern, decent price action. And so this is the only one I have a position in right now.
Let's talk about Indian new.
Yes.
It's called Zomato, Zomato. It's a food delivery startup.
All right, let's see. So this one here, I would say, what I do with my trend lines too, is if there's a, like this definitive trend line, you get like first touch, second touch, and then like, you can kind of tell, okay, maybe market participants see this. I like to duplicate my lines. Like even if it's not as clean on the bottom side of the pattern, like if there's a pretty well-defined, pivot point, if you will, I'll usually just kind of on one side of the trend, I'll usually just duplicate the line and see if it fits. And this one's pretty good. So, so again, these rising channels usually break lower. Again, they try to break higher. The exceptions to the rule will need volume. So if this is to break higher, you really want volume to come in like really hard and to kind of eviscerate the negative aspect of the pattern. But, this kind of came in, lost its way below this channel. And then since then, it's just been basically floundering around. Maybe you kind of consider this, downtrend spot. So assuming this higher low here holds, maybe it bases out for a few more weeks. You really want to see it tighten up for a couple of weeks or a week. And then you want to see it really try and take out this prior support. And then in conjunction with this downtrend line, I call that like 75. So you want to see this hold, and you really want to see this tighten up, and then maybe you can kind of get a move back through this downtrend line. But this looks like any old stock that has succumbed to the general market weakness and needs some work.
Okay, and the last one, Paytm. It's a payment startup. Paytm. Pay, P-A-Y.
Oh.
Paytm.
P-A-Y?
No, P-A-I-T-M. That's the one you can write Paytm full. Paytm, P-A-Y-T-M.
Oh, gotcha. This guy?
Not E, no E. T-M only.
Got it. Sorry.
197, correct.
Okay. All right. This one looks
owned by a lot of retailers. They are stuck.
So this, to me, this gap area here looks key. I would maybe draw like this to me looks like a low level channel. So if this can go, that's a pretty big decline. So this is from almost 2000 down to, 5. Normally you want to see a correction of like 35% or less in a stock. In this market, you just haven't really seen that many of them. So most stocks look like this. But I think from here, you can even draw like a downtrend line. I think the best thing for this is to go sideways. So this is usually what you want to see after a decline. Like here's like, consider this like a stage 4 decline. And then usually it resets and goes into stage 1. So stage 1 is where all the accumulation happens. So if this thing is any good, you'll start to see institutions kind of pile into this. It looks like it might need a little more time to vacillate out. Like probably best case is if it goes sideways for another couple months, and then it starts to maybe, you can break out here, and then you maybe want to see like a retest, come down to kind of confirm, hey, we are now, this was prior resistance. Now we're possibly flipping into support. And then you can kind of see the stock start to advance. So I think when you get these big breaks, what I like to see is like the more time, the better. Again, time heals all wounds, not all wounds, because not all stocks come back. Like everybody always says like, oh, well, Apples and Googles and Teslas, those will have like multiple parabolic moves and still repair. That is the exception and not the rule. Most stocks that, like a ASON or a, they have a nice big move and then they get crushed. Like these will never come back. And so I think that's important to not fall in love with the story, get while the getting's good. But let's say that, for example, since it's a newer IPO, you want to see it maybe vacillate out some more, and then eventually needs to take out this 724, 725. But it doesn't look that bad. It just looks similar to other things. And this is what you want to see is the sideways action. Maybe the markets, the general indices are making lower lows and this thing's trying to make higher lows. So it's a decent look to it so far down here.
Awesome. Amazing. So I have just one thing to say you. I mean, I've heard this phrase, keep it simple, stupid. So you're actually keeping it so simple that a stupid person like me or anyone can understand this. And really, do you make so much money with this simple stuff?
Yeah, the simpler, the better. Like for me, whenever I try and get smart and jump out of my comfort zone, like I lose money. Like when I play incredibly dumb and don't listen to the news, just interpret what the market's doing, interpret the price bars. It doesn't always work, but you have a plan in place. And that is when I'm at my best, is you just tune everything out. You just focus on what you know best. And I think people run into that roadblock where they think, oh, the market's this dynamic beast. I need to have, I need to beat the pros and have this, a million different indicators. Like I really don't look at indicators that much. I'll look at moving averages, like, are they rising or declining? And that's pretty much it. Like I like to look at price structure and, make my buy or sell decisions based on the price structure. What are the institutions doing right now? They're selling stock, until they come back in mass and start, supporting certain stocks, then I think, the environment's going to be a little tougher, but, from good times come bad and then come the good again. So you just really have to sit and wait and don't get caught up in watching news. And I haven't watched Bloomberg or, CNBC in years. It never helped me. So I think that keep it simple, stupid mentality is really helpful for me and maybe other people as well. But it's such an easy game to get caught up in a million different things that don't add value to making money. And I think it's one of those things you find over time too. Certain things will help you, certain things won't. But for me, just understanding the price patterns and the chart, interpreting what the bars are doing, what the buyers and sellers are doing, that kind of helps me get my edge and trade. So it's a challenging game, but I love it more than anything. And I couldn't imagine a life, like I said, where this wasn't a part of it. And it just brings me a lot of joy. I love doing the homework. And I think you have to have a passion for it too. If it pains you to go through a lot of charts each night or on the weekend, then, maybe it's not for you, which is fine. But, I love going through on the weekends and combing through thousands of charts. And even if, my wife's like telling me to, let's go do stuff with the kids. There's a balance too. I think that's important. It's a good point. Like, while you may love it and it's your passion, I still think there are times where it's good to get away, get a break, get a mental break, and really strike that balance, because the market will be there when you get back, and it's not going anywhere. And I used to trade like in the beginning, like the market was going away forever. I was like, oh, I got to buy this, and this and that. And it's just not the case. Most of the time the market just bases out and doesn't go anywhere. And right now it's probably a good time to study and really dig into, how stocks move and not maybe get so active in the market. But I'm rambling, Vivek, but I love it. And
that clearly comes out there. Your love for the market is coming out so well.
Yeah. I hope your listeners got something out of this. And it was somewhat helpful.
It was amazing.
On my rambling.
No, Ryan, you were not rambling. You were making a lot of sense. Your passion was clearly coming out. So it was fun interacting with you. Thank you so much for this precious time you have given to me and my learners. People will have a lot of takeaways from this. I strongly believe that everyone gives us at least one thing. And 1 hour is not a big deal for us to go through that one single learning. And 150 learnings I have. And you can imagine the kind of person, the kind of trader I've become after going through all the learnings. So thank you so much for empowering me and my learners.
My pleasure. You've done a fantastic job. The way you built your channel and community is just absolutely amazing. And so keep up the great work.
Thank you, Ryan, and we'll be in touch. And guys, I'm going to share with you Ryan's Twitter handle below this video. So give him a follow, and he's a very generous person. I'm sure if you have any query, he'll reply. He's pretty active on Twitter. Thank you so much, Ryan. Looking forward to meet you someday, either in
Likewise.
India or in US.
Sounds great. Looking forward to it, Vivek.
Looking forward. Thank you. Bye-bye. Please take care.